In this video, I'm going to cover simple rules you can follow for your investments and the best Fidelity funds that you should invest in so you can build your wealth passively. Stay to the end of the video so that you can get 2 simple rules to follow so that you don't end up costing yourself tens of thousands of dollars. Yo everybody, what's going on? If you're new here, I'm Davis and welcome to my channel. If you're like me and you see movies like Wall Street, Boiler Room, or The Wolf of Wall Street and you thought investing was just for the wealthy or it's super complicated, then you're not alone. I used to think you needed a ton of money to get started or you needed to follow individual stocks and do a bunch of research, but after doing some reading, that's not the case. While it can get more complicated with more advanced strategies, I realized that you can keep things simple and still build your wealth over time. In this video, we're going to keep it simple so that you can get started and build your wealth simply. Disclaimer, I'm just a random dude on the internet and this video is for entertainment only. Realize that investing comes with a bunch of risks, so consult with a financial professional before you make any investing decisions. Before we dive into the funds, here's 3 simple rules that you should follow before you pick your investments. The first rule I follow in investing is I want to diversify my portfolio. By investing in index funds, you'll automatically be diversified across multiple markets. The next rule I follow for investing is to try to keep things simple and not overthink things. By investing in index funds, you automatically keep things simple by investing in just a few things. And the third rule that I follow for investing is I want to automate my investments because I want my wealth building on autopilot. The first fund you should look into is the Fidelity Total Market Index Fund. That's FSKAX. This fund invests in a broad range of US stocks so that you can try to capture the whole US market. The fund has a mix of small cap, mid cap, and large cap companies. Basically, any publicly traded company you can think of is probably going to be in this fund. This fund has an expense ratio of 0.015%, meaning for every $1,000 you invest, you pay just 15 cents in fees. The stocks in this fund range from companies as large as Google and Apple all the way down to companies as small as Funko and Red Robin. I really like this fund because you're going to be well diversified in very strong large cap companies and then also be able to take advantage of the larger growth for the small cap companies. The next fund you should look at is the Fidelity 500 Index Fund. That's FXAIX. Try saying that 10 times in a row. I actually got that on the first take. This fund holds the top 500 companies in the US. It's more conservative than the total market index because it doesn't invest in smaller, more risky companies. This fund has an expense ratio of 0.015%, meaning for every $1,000 you invest, you pay just 15 cents in fees. Some examples of companies in this index are going to be Google, Apple, and then all the way down to Nordstrom and Gap. You should invest in this fund if you want to invest in the largest companies in the US that are big and safe. The next fund you should look into is the Fidelity Total International Index Fund. That's FTIHX. Investing in this fund will give you exposure to emerging and developed international stock markets. Some examples of stocks in this fund are going to be Alibaba, Sony, Samsung, SAP, and then even Nestle. I really like this fund because you'll be well diversified in international markets and not only exposed to US markets with the other funds. This fund has an expense ratio of 0.06%, meaning for every $1,000 you invest, you pay just 6 cents in fees. Next one you should look into is the Fidelity US Bond Index Fund. That's FXNAX. Think about investing in this fund because it'll give you exposure to bonds so that you can help balance out your portfolio so that you aren't 100% invested in stocks. This fund has an expense ratio of 0.025%, meaning for every $1,000 you invest, you pay just 2.5 cents in fees. Another fund you should look into is the Fidelity Nasdaq Composite Index Fund. That's FNCMX. This fund tracks a Nasdaq index. Just think of all the most innovative companies in the world. Most likely they're going to be in this index. Examples of companies in this index are going to be Google, Facebook, Netflix, Intel, and even Tesla. This fund has an expense ratio of 0.3%, meaning for every $1,000 you invest, you pay just 30 cents in fees. I want to quickly mention the Fidelity Freedom/Lifecycle funds. These funds are best for people who want to be entirely hands-off and want to be completely passive and let Fidelity do all the work for you. Expense ratios for these funds are going to be slightly higher because Fidelity is going to be doing the investments and balancing for you, but this is a fantastic way to still build your wealth. The way these funds work are you pick the fund based on the year that you traditionally would retire. So in order to figure out which Freedom Fund is the one for you, just figure out what year you'll be 65 to 70 years old. For example, if you started working today and you're 20 years old, then the Freedom Fund for you would be the 2065 fund. In case your exact fund would be the Fidelity Freedom Blend 2065 fund, that's FBBSX. Again, these funds are great because Fidelity will automatically invest for you, keep your portfolio diversified, and then automatically rebalance your portfolio. Let me know down in the comments below which fund you're thinking about investing in. I used to think investing would involve a lot of money and be very time consuming, but the more I read and the more I learned, I realized you can keep it as simple as you want and you can get involved as much as you want. The thing I like so much about index funds is I don't have to wake up for an opening bell and then do any kind of day trading. I don't have to keep track of any individual stocks or do any kind of research. I can just invest in these index funds and then watch my wealth grow. So these are great funds for your retirement accounts, but if you're looking to invest in your brokerage accounts and you want to know equivalent ETFs, subscribe so you don't miss out on that video. We just went over these Fidelity index funds, but if you want to know the difference between index funds, mutual funds, and ETFs, I'll link a video up above and then down below. Thanks for watching. There's going to be more videos here, and then also go check out my playlist. I'll see you guys next week.